Okay, so now we'll go ahead and take on an example on redemption of preference shares. As an excellent example where you have a conversion of partly paid shares into fully paid shares without requiring the shareholders to pay for the same. That is a type of bonus issue where you're going to use the reserves to convert the partly paid shares into fully paid shares. And then also there is another bonus issue where the unissued shares are issued as fully paid bonus shares, right? Now let's go ahead and take on this example. Esma.
The following is the balance sheet of Z Limited as on 31st March 2000.
Okay.
Now on the liability side, 50,000 equity shares of rupees 10 each, rupees 8 per share called up and paid up 4 lakh.
It is the olden day format, the balance sheet format, right? Not the schedule 3. So what is the share capital? 50,000 shares.
Equity shares of rupees 10 each, 8 per
Only
share
rupees
called up and paid up.
8 called up and paid up.
up.
These are partly paid shares. Next.
5,000 13% redeemable preference shares of rupees 100 each, 5 lakh.
Okay.
Securities premium 98,000, general reserve 90,000, profit and loss account 1,12,000.
So guys, have these numbers in your mind. What is the balance in general reserve? 90,000.
90,000.
And what is the balance in SP, security premium?
98,000.
98,000 rupees. And what is the balance in profit and loss account?
1,12,000.
Which is nothing but the surplus. Or we also call it retained earnings. Right? How much?
1,12,000.
1,12,000. Have this in mind, right?
Yeah.
Next.
On the asset side, you have fixed asset, investment, stock, sundry data, cash at bank.
Okay, how much in fixed assets?
6 lakh.
6 lakh rupees. And how much in investments?
Investments 2 lakh, stock 2 lakh, debtors 2 lakh and cash at bank 3 lakh.
Next.
Now the company resolved A. To convert the partly paid equity shares into fully paid up on 1st April 2000 without the requiring the shareholders to pay for the same.
That means on 50,000 shares, you're going to make a final call of rupees 2. That is 50,000 equity shares into rupees 2. 1 lakh will be called. But this 1 lakh will not be collected in cash from the shareholders. That means you're going to utilize the reserves to convert the partly paid shares into fully paid. Even this is a type of a bonus issue. Is that fine?
Yes, sir.
It is a type of bonus dividends, we say. Yes.
Yes.
Next.
B. To redeem the preference shares on 30th April 2000 at a premium of 7.5%. And for this purpose...
Wait. So what is we have in the balance sheet 5,000 shares of rupees 100 each. Preference shares, right?
Yes, sir.
Rupees 100 and you want to redeem the shares at 7.5% premium. If you take 7.5% on rupees 100, it is 7 rupees and 50 paise is a premium per share. That means you promised to pay them rupees 107.5 per share on redemption. Next.
And for that purpose, to issue 3,000 12% preference shares of 100 each at a premium of 10%, payable in full on application.
You want to issue 3,000 preference shares, new, face value 100 each at rupees 110 per share. Next.
The resolution were carried in effect for the purpose of the above redemption on 29th April. The company sold its fixed assets costing rupees 3 lakh for rupees 3 lakh 82,500 and all the investments for 2 lakh and 60,000.
You saw that? It is given that you sold fixed assets costing how much?
3 lakh.
3 lakh out of 6 lakh rupees available on the balance sheet. You sold fixed assets costing rupees 3 lakh or book value 3 lakh for 3 lakh 82,500. Sold all the rupees 2 lakh worth of investments on your balance sheet for rupees 2 lakh and 60,000 a day before redemption. Next.
On 31st May 2000, all payments were made on redemption except to holders of 200 shares who could not be traced.
A day before the preference shares are due for redemption, you sold investments, right? It is given that all the preference shareholders are paid by 31st May 2000, but they could not find people holding how many shares?
200.
People holding 200 preference shares. That means what? Out of 5,000 shares, you're going to make payment only on 4,800 shares. The holders of 200 shares could not be traced. So the company couldn't have paid that money. Next.
On 30th June 2000, the directors issued fully paid bonus shares to them, to then shareholders at the rate of 3 for 5 held at a premium of 5%.
This come again. On 30th June 2000.
The directors issued fully paid bonus shares to the then shareholders at the rate of 3 for 5 held at a premium of 5%.
Okay, now you all know that bonus shares are given to the holders of equity shares. We know there are 50,000 equity shares which are now fully paid, right?
Yes. Sir.
You all know that bonus shares can be issued only when what? The shares are fully paid. There are 50,000 equity shares. That into 3 bonus for every 5 shares held. Into 3 by 5 will give you 30,000 bonus shares will be issued of rupees 10 each at 10 rupees and 50 paise. 5% on 10 rupees. 50 paise premium. Then
you are required to give journal entries in the books of the company to record the above transactions.
okay, so guys, only entries. So this sum is very important. Just go through this. I'll just run through the entries. Just see the first 3 entries that you see on the screen will be relating to conversion of partly paid shares into fully paid. The first entry for making the final call, share final call account debit. If you want, you can write equity share final call. Is that fine?
Yes.
So share final call account debit, rupees 1 lakh, 50,000 shares into rupees 2. 2 equity share capital, 1 lakh rupees. Then the next entry should have been actually bank account debit to final call, right? But here we want to use the reserves to make the shares fully paid. So what I do, I pass an entry for the bonus. The entry will be for this, for converting partly paid shares into fully paid. You cannot use a balance in your securities premium for bonus. You can use only your free reserves. So I use a general reserve. How much? 90,000 available. Remember that number?
Yeah.
And use a 10,000 from your PNL. We have 1,12,000 on the balance sheet.
Yeah.
Use a 10,000 debit PNL to bonus to shareholders account. And the next entry will be not bank account debit to final call. It will be bonus to shareholders account debit
To
share final call 1 lakh rupees. So guys, if you want, make a note. After these 3 entries, there will be no balance in general reserve. It will become nil. Remember, you had a 90,000 rupees credit balance and you debited 90,000. That's gone. You had a balance of 1,12,000 PNL credit balance. Other 10,000 has been debited, leaving a balance of 1,02,000 rupees. Is that clear? So guys, people watching the video, please make a note.
Yes, sir.
Balance and PNL 1,02,000 you have. Now what happens on 29th April? For the purpose, the preference shares are due for redemption, right? On 30th April.
Yeah.
Now what you do is, you are supposed to pass entries for sale of assets and also what? There is a fresh issue of shares, right?
Yes, sir.
For the purpose of redemption. Yes.
So bank account debit 3,82,500.
Bank account debit 3,82,500 for the sale of asset. 2 fixed asset, how much?
3 lakh.
3 lakh. 2 profit and loss account.
82,500.
It's again 82,500. And then for selling investments, bank account debit 2,60,000.
Yeah.
To investments rupees 2 lakh. To profit and loss account 60,000. Guys, remember, after these 2 entries, the balance in your profit and loss will be, remember you had 1,02,000.
Yeah.
Please do the math, guys. Okay. I don't have to do that. You have to do it at your place. 1,02,000. Add 82,500. Add another 60,000. If you add all the three numbers,
2,44,500.
exactly, you'll have 2,44,500 in your calculator, which is a balance in your profit and loss account credit balance, right? Good. Have that in mind. Now there is a fresh
issue of preference shares.
exactly for the purpose of redemption. So a bank account debit 3,000 shares issued at rupees 110, 3 lakh 30,000 to 12%.
Preference share capital 3 lakh.
3 lakh rupees to securities premium
30,000 rupees.
and one more point. I think you had 98,000 in securities premium account in your balance sheet. To that add another 30,000. In all, 1,28,000 is a balance in your securities premium account. Is that clear? Okay. Now we'll march forward. Now I should pass entry for what? Amount due on redemption.
Yes, sir.
Just see the entry. It is what percent?
13% redeemable.
Preference share capital account debit. I'm cancelling the credit balance. Face value how much? 5 lakh rupees. That is 5,000 shares into 100 each.
Yes, sir.
Premium on redemption account debit. Or you can write a premium on redemption of preference shares account debit. How much? It is 7 rupees and 50 paise per share into 5,000 shares.
37,500.
And to preference shareholders account, it is a 5 lakh 37,500. Next entry.
Preference shareholders to bank.
To bank, what you should do, you should minus the amount payable on 200 shares. What you can do, we are supposed to pay 5,37,500. From that minus
21,500.
Exactly, 200 shares into 107.5 cannot be paid. Understood?
Yes, sir.
So what is the net amount? 5 lakh?
16,000.
Very good. Preference shareholders account debit to bank 5,16,000, right?
Yes, sir.
And then do mention the dates out there. Have you mentioned the date?
Yeah.
What is the date?
31st May.
31st May is a payment.
Sorry, 31st May.
Okay, it's a payment. Yeah, it's okay. It's okay. No problem. No problem.
Yes.
Okay. So then next entry is what? Cancelling the premium on redemption. For that purpose, what you can do? You can use a balance in your profit and loss account. I think we have 2,44,500. I'm going to use 37,500 of that. Profit and loss account debit to premium on redemption account is 37,500. But after you debit this account, you'll still have 2,07,000 left in your P&L. Remember, we had 2,44,500.
Yes, sir.
Minus 37,500. Okay. Now you all know this. We have to transfer
CRR.
to CRR whenever preference shares are redeemed, right?
Yeah.
What is the amount to be transferred to CRR?
Face value.
The nominal value of shares redeemed is 5 lakh rupees. And what is a fresh issue? 3 lakh. Fresh issue. Do not consider the premium on fresh issue, right?
Yes, sir.
Take the proceeds excluding premium. What is the net amount? 2 lakh is amount to be transferred to CRR. Again, use a balance in your profit and loss, a general reserve or any other free reserve. Is that fine?
Yes, sir.
So we have balance in P&L. We have 2,07,000 left. So use 2 lakh. Profit and loss account debit to CRR. But in the exam, please write capital redemption reserve account 2 lakh rupees transferred. So all these entries are relating to what? Premium on the redemption of preference shares. Right? That is done. Now we start the last 2 entries relating to bonus shares issued. We discussed, remember, 30,000 bonus shares are issued at 10 rupees 50 paise per share.
Yes.
Works out to 3,15,000 is the amount of bonus issue. Of this 3,15,000, you all know this. First, we have to utilize a balance in CRR. Then we utilize a balance in securities.
Premium.
Premium collected in cash. Okay, so over here, CRR debit, we have 2 lakh rupees, no problem. We need another 1,15,000, right?
Yes, sir.
But remember, we have 1,28,000 balance in securities premium. So debit 1,15,000. To bonus to shareholders account, how much? 3,15,000. And when the bonus shares are issued, what is the entry? Bonus to shareholders account, debit 3,15,000. To equity share capital, 3 lakh rupees face value. To securities premium account, it is 15,000. That is 30,000 bonus shares into 50 paise per share, 0.5 premium. So 15,000. Is that clear?
Yes, sir.
So guys, please go through this example really well. Okay, for your examination. Good luck.
Thank you.